before I go to the AWS side of it, come to the geopolitics of it all. How much are we able to see Amazon survive and weather this at the moment by having brought in inventory, but ultimately be able to change up their supply chain too?
Yeah, so I think they're definitely working the situation. They would acknowledge that it's very uncertain. We spoke with them last night, and there was definitely that was the message on all of this. But I think the idea is that we think about it kind of a guns for the war, picks and shovels type of dynamic here. Amazon has millions of sellers. There will absolutely be sellers that are impacted by this in terms of having supply chain exposure to China, but there are others that don't. And when you think about people, looking for deals, trying to save money already, they're going to go to Amazon, and they're still going to find sellers that are not exposed to those China supply chain headwinds, and they're going to find decent prices, and they're going to buy. So I think under almost any macro scenario, we're not saying we know the downside, but under any scenario, Amazon gains share.
I want to go to the fundamental basics of how Amazon's business works. Half of the audience watching Bloomberg Technology know it as Amazon.com, an e-commerce business that's the vast volume of sales. But the vast majority of operating income is AWS Cloud. So when Amazon tells us that in the current period, operating income will be billions of dollars below what you guys on the street had forecast, is that singularly a tariffs issue on .com, or is it also reflecting softness in cloud spending?
I don't think it's reflecting softness in cloud spending. In fact, I expect that to kind of continue. I think the issue is more just that, well, one thing I would clarify is that, yes, the midpoint of the guidance was below the street, but typically Amazon hits or exceeds the high end of the guidance. And so I think really when you think about where the quarter likely ends up, it was probably closer to in line. I'm sure they're building in some risk around just the tariff situation and the impact that could have. But the ad business drives a huge portion of that operating income as well. And that's still growing really well, too. That grew 18% in the quarter. So I think there's less sort of discounted in there, less concern in there than you might think.
And they're still very focused on all the innovation, whether it be over AWS, whether it be in space, whether it be on what they're doing in terms of getting your product to you faster. All of that, though, takes costs. And I'm interested that Meta signal, look, we're sticking to, for example, our CapEx, and we're raising it because of infrastructure spend is going to go up because of tariffs. Do you think that's going to affect the cost of doing business at AWS in any way, Brad?
It could, yeah. I mean, I think the comment we made earlier in the week on Meta was that, they called out infrastructure equipment and component costs are going up. Technically, what that means for the industry is that structurally return on invested capital is lower today than it was 90 days ago. So sure, that's not great. I think in Amazon's case, Meta probably came out a little bit even more unscathed from tariffs based on what we know at this point. So I think Amazon's probably having a little bit more measured caution, i.e. they didn't take the CapEx guide up. But I think they sound every bit as bullish on the cloud business and their growth there going forward.
What did Amazon do well in the quarter?
What did they do well?
Yeah.
They grew ads 18%. They did not miss on ads, which they had been in prior quarters. So that was probably the best, one of the standouts.
Can I jump in there, Brad? I'm really interested in the ad side, because you said that now really clearly twice. How much of a headwind is that going forward if third-party sellers become that little bit weaker, if we do see the knock-on effects of tensions in trade?
Yeah, for sure. So I go back. So ads basically have a one-to-one relationship with volume, right? Units, essentially. And so back to what I said earlier with that seller density, a seller who has China supply chain exposure might lose some volume, but there's going to be another seller that's going to step in there and probably still move that unit. If they do, they're still going to be spending those ad dollars. So we think that actually can be more resilient here.
Project Kyper has got off to a rocky start, I think it's fair to say. Do you even model that into your model for Amazon? Any meaningful contribution for a space-based internet business that takes on Starlink?
Yeah, it's hard. That's what I'll say. For Q2, it's embedded in the guidance. They launched a rocket earlier in April. They're going to launch more in Q2. So clearly there is cost. And, I think we're thinking about maybe $100 million on average per rocket that goes up. So that's kind of the magnitude we're talking about. And they've talked about kind of somewhere in the range of 80 rockets or maybe $10 billion of total outlay related to the Constellation project overall. So the good news is what they said last night was they are going to have commercial service up for that by the end of the year. So they're actually going to be driving revenue. It's not just a cost headwind, which is nice as we think about 2026. But yeah, the math on it in our model, very difficult at this point, I'd say.